Good morning. Happy Thursday. Happy December. I hope everyone who celebrates Thanksgiving had a good Thanksgiving and got to spend time with their families. As always, y'all, as you jump in, please let me know that you're here, that you can hear me. And if you're new, let me know where you're listening from or watching from. Let me know where you're listening from. Like I'm an old radio DJ. If you are watching this on replay, remember that if you have questions of your own, to put them, to put them in our Facebook group, and I'll talk a little bit about that in just a moment. But in our Facebook group, Money, Tax, and Finance, there will be an event for each event we have. Move my phone because it's making my microphone buzz. Okay. What was I saying? Oh, there'll be an event there'll always be an event in our Facebook group that says when our next event is. And once that is up there, go ahead and go to that event. And that's where you should put your questions for the next live. I had a couple of people telling me they ask them, like they'll be watching last week's and they'll put their questions in there. And I do not go back and watch those. So definitely, if you're watching this on replay, put your questions in our Money, Tax, and Finance group on the event for the next Facebook Live that we have. If you're here live, welcome. I see you all joining in. A lot of you on YouTube, some of you on Facebook. Welcome, welcome, welcome. If you're watching on Facebook, you guys, at the very top, there should be a thing that says, I'm using StreamYard, and to let me use your name if you want me to see who you are. If you don't care, I don't care. I also I tend to open Facebook over here on the side so I can see you anyway, even if you don't let StreamYard use your name. So as always, I'm just giving everyone a few minutes to get on. I do have a very hard stop time of 10 o'clock today. So I will get all your questions in, and we have a few little updates I want to chat about, but hard stop time of 10 o'clock today. Do a little bit of housekeeping and then we will get into it. So I will not be here next week. Next week is the 9th. I will be traveling home. I'll be on a plane. So I will not be here. I will be here on the 16th, which is 2 weeks from now. And then I will probably not be here again until the beginning of next year. So just to kind of give you an idea of what to expect for the next few weeks for this last month of the year. All right. So I do have a few questions, you guys, that I've got in the Facebook group that I'll go ahead and answer first. And excuse me. Let me get some water. Hold on. No, coffee's better, right? All right. As always, if you're watching live, guys, make sure to put any questions you have in the chat. All right, so I can answer them. That you guys are always my first and foremost. Like you're my number one priority when I'm here. So put those questions you might have in the chat if you're watching live. Otherwise, I will go over a few questions I got earlier this week, and then I'll go over a few updates. But as you guys have questions, definitely put them in the chat if you're watching live, and I will answer those as well. Okay, so a few questions I got over the week. So one was from DV. He says, and I think he's here. He says, home office renovations. Are you allowed to use business funds for it? Example, redoing a front fence. So let's go first with, are you allowed to use business funds? All right, keeping in mind, you guys, that depending on how your business is set up, right, determines how you can use the money that's in your business for non-business items. All right. If you're a sole proprietor, a single member LLC, if you're a business who reports your income on a Schedule C, technically your business funds that are in your business bank account, you use them for your business expenses, but you're allowed to draw those out for personal use, however and use those funds for however you see fit. So when you're a Schedule C business, you have all of your business income, you have all of your business expenses, you pay tax on that, what we call net income. And then whatever's left in your bank account, guys, is yours to take out and use how you wish. All right. When you're a partnership or an S Corp, that money needs to be taken out in what's called a draw or a distribution. But same thing, it's going to be taxed. It's not going to be taxable, assuming you have basis in your business still. something we're not going to get into detail. But essentially that money that is in your business, guys, as long as you're following the rules and of whatever entity type you're set up as, is yours to take out as a draw or distribution and use on whatever, personally you see fit. Let's back up and say, let's answer if these home office renovations, if they're a business deduction. That is different. All right. So in that case, you guys, if you are taking a home office deduction for your Schedule C business, so you're a sole prop, you're an independent contractor, you're a single member LLC, anything like that, if you have a home office and you are taking a home office deduction, okay, you always have two options. Okay, you have the simplified method, which just means you take, it's $5 per square foot of your home office up to a $300 deduction per year. That's a simplified deduction for home office. The other option is to take the actual expense, and that one works like this. So you take your home office square footage and you divide it by your total home office square footage to figure out what percent of your, let me back up. You take your home office square footage. So let's say your home office is 100 square feet. It's a 10 by 10 room. You divide it by your total home square footage. Different, right? So let's say your whole condo is 1,000 square feet, just for simplicity. Okay, 100 square foot office divided by 1,000 total square feet. That's 10%. So 10% of all of your home expenses are going to be deductible as part of your home office expense. What falls into this? So it's going to be your rent or your mortgage interest, depending on whether you rent or own. It's going to be your HOA fees. It's going to be your home owner's insurance. It's going to be your utilities, your house-wide utilities, right? All of those things go into this total, right? So for the year, so let's say in the year on all of these home office expenses, you spend $10,000. Okay, so $10,000 total home expense. 10% of that we've allocated to your home office. That means we get to take $1,000 home office deduction for that year. Part of that home office deduction, I promise TV, I'm circling right now back around to your question, is what is known as depreciation. Okay, and that is where your home renovations are going to fall into. And I'll circle around to your home renovations, but let's talk about depreciation as simplified as in a way as we can. Your house value is $500,000. All right, $500,000. And anytime you own real property, like a home or an office building, it's depreciated, meaning you take a piece of the expense over the lifetime of the property. This holds for any type of property, but for a home, it's 27 years. So let's say our house is $270,000. I like easy math. $270,000 in our house, divide that by 27 years. That means if we're depreciating our entire house, we're taking $10,000 a year in depreciation. However, circle back around to the fact that our home office is only 10% of our home. So 10,000, right, is our total home depreciation. We only get to take 10% of that as a home office deduction. That's $1,000, okay, of depreciation. So original home purchase, $270,000, okay. Now, home renovations. Anytime you're renovating the home, if you're doing improvements to the entire home, including, fencing, roofing, painting, anything that's a total home renovation, that's going to add to the cost basis of your house. So we originally bought our house for $270,000. Let's say we just put $10,000 of renovations into it. Now our home basis that we're depreciating is $280,000. All right, $280,000. Excuse me. This is a lot, okay? Like depreciation, all the stuff. That's why normally, guys, if this is something you're doing or something you're interested in doing, you have a tax professional helping you. TurboTax, to a degree, can help you with this, but you do still need to have an idea of what it is you're looking at. Because I know a lot of us, when we're in TurboTax, previously guilty of this, is we plug numbers in and we check a box, and when we check the box, it makes the green number go up, and when we uncheck it goes down. We don't know what that box means. We just know that when we click it, it makes our refund go up. So we click it, not knowing really what we're clicking, right? That is what happens with home office, actual home office expenses and depreciation and all that when you get into TurboTax, if you don't have a basic understanding of what these terms and ideas are, all right? So, excuse me, I'm so sorry. So hopefully that kind of makes sense there. Let's see, I wonder why my comments aren't coming up in StreamYard. I see over here, Dave Ferguson in Facebook says EIDL, paying yourself from an EIDL grant for services rendered. Do you have to then claim as income, single member LLC? That is a great question. Okay, quick refresh of what is an EIDL, right? Your EIDL is your economic injury disaster loan. And we call them EIDL loan. But there was a portion of that was called a grant or an advance. Free money, guys. And that number was typically $1,000 per employee. Or in this case, if you were a single member LLC, it was $1,000 given to you. Not to be taxable to you on a federal income level, depending on what state you're in. Most states not taxable to you on a state level, but there were rules on, what can you do with that money? And the EIDL was much more broad, right? It was the only thing they said not really with an EIDL, the biggest thing is you could not use any EIDL funds to expand your business, right? And when we're talking $1,000, we're not going to go buy a brand new building with $1,000, right? That's just not feasible. But that EIDL money, grant or loan, could be used for your normal operating expenses. The purpose of it is to keep your business running in a time of economic need. Okay, COVID was an economic disaster requiring need. All right. So Dave's question is, can you pay yourself from an EIDL grant for services rendered? Do you have to then claim as income on a single member LLC? So, so I just want to make sure I'm answering the right question and not just the question I made up in my own head. So paying yourself from an EIDL grant for services rendered, got it. Do you have to then claim it as income on a single member? So I guess my question is, so I'm assuming based on your question, Dave, that your business is a single member LLC. You took a draw of $1,000 saying this was my single member LLC, paying me $1,000 for my services rendered. No, it's a draw at that point. If you're a single member LLC, any money you take out for you personally, for services rendered, for whatever, is a draw. It's not taxable. All right. If you have an S Corp or a partnership or a C Corp and you got EIDL grant, if you got an EIDL grant, then that money should not be used to pay you with a distribution. All right. That grant money should be used to pay operating expenses. Keep in mind, you guys, money, your EIDL money is not purple, whereas all the money you earned is green, right? So, well, you could say, yeah, I paid myself $1,000. What you need to do with that EIDL grant, if you were to ever get audited, I don't think they're going to audit these, but if you were, is outline $1,000 of expenses within your business that are, qualified just operating expenses. So if they ever did come back and audit you, you'd be like, yeah, here's the $1,000 I got. Here's what I spent it on. All right. Keeping in mind that with the EIDL, it's basically any operating expenses. There were no limits on what you could spend this on within your business. And there was no time frame. You didn't have to spend it within a month or 3 months or 6 months. In fact, if you received an EIDL last year, you could still be spending the money this year if you needed to. Okay. And so Dave continues, says used for business expense, but also can be used for services rendered. Again, when it matters what kind of business entity you are. And I think based on you, Dave, you're a single member LLC. So yes, that is fine. If you're an S Corp or a partnership, then if you're an S Corp, you should be paying yourself with W-2 wages, in which case the EIDL can be used to pay yourself those wages, those W-2 wages. That's totally legit. If you're a partnership, you may get guaranteed payments. There's a lot of, different ways you could be set up as a partnership. So we won't dig into that because I believe based on your first comment that you're a single member LLC. So it all comes back to single member LLC receives $1,000 grant. Dave pays it out of his single member LLC to him personally. There's no tax consequence there. It's just a draw, just like it would be if you took non-EIDL money out. All right. Okay, let's see. I don't see any more questions. I'm keeping an eye on the clock. We're halfway through. We're good. Okay, you guys. So let's talk about updates. Guys, again, if you guys are watching live and you have more questions, put them in. I'm here, but I'm going to go over a few updates. There's really not a lot of news, guys. There's really not a lot of news in the last 2 weeks. The Build Back Better Bill Act, I think it's called Act, but Build Back Better Bill just sounds, there's more alliteration. It hasn't passed the Senate yet as of this morning, right before here. It passed the House 2 weeks ago. Passed the House on the 19th. And with the biggest tax implications, income tax item that we really cared about, two things. One, they're messing with the corporate tax rate. That is something they are still working on. That's why that's part of the reason it has not passed the House yet. So that's not something we're going to dive into, but they are trying to raise the corporate tax structures for C corporations, high earning C corporations. The other one that we are keeping an eye on, you guys, is, let me find it. I want to make sure I give you guys the right numbers, but it's the SALT, the state and local tax deduction that we get to take on Schedule A of our that we get to itemize on Schedule A of our 1040. Okay, so again, this has not passed yet. Okay, but this is the part of it that if it does pass, that we care about because it has to do with income tax. Right now, as of the 2018 Tax Cuts and Jobs Act, that bill, that act, put a limit on your state and local tax deduction when you itemize on Schedule A of $10,000. It says no matter how much you pay in state and local taxes, hello, we're talking to you, California, Texas, New York, no matter how much you pay in a year in state and local taxes, you're only going to get to deduct $10,000 of whatever you spend. And you guys, this is your state income tax. This is your property tax. This is sales tax you pay in your state. So anything that's state and local, you itemize on Schedule A if you itemize, but they limited it to $10,000. The Build Back Better Act proposes that the threshold get raised from $10,000 to $80,000. So we'll see what happens there with that. We'll see if that passes. But that's really the only piece of this Build Back Better bill or act that impacts, as of right now, that I see that impacts the income tax portion that we care about here in this group, right? So in terms of updates from the IRS, everything that's come out this last week. So they're having a security summit this week, or maybe it was last week. I think it's this week. So they're having a security summit. So it's National Tax Security Awareness Week. So everything they've come out with this week has to do with security. So just a few quick reminders, you guys, to just watch out for scams. Especially, it was Giving Tuesday, so just be wary of where you're giving your charity dollars. IRS scams. Okay, guys, the IRS will never call you or email you. They may call you down the road, but everything always first and foremost comes via mail. Okay, it always comes via mail. They definitely will not text you. They definitely will not email you. And depending on it, they may eventually call you, but that's even rare too. And you're never going to get a phone call if you haven't received a ton of mail notices. Okay. So everything update wise this week coming out of the IRS is scams. Be aware of them. Be wary. Be cautious. Okay. All right. We have 11 minutes. If you guys have any other questions, I don't see any in our chat. I'm just going to open YouTube as well, since it's only it's weird. Only some comments are coming through on StreamYard, which is unusual. So I am going to just real quick open up YouTube and just make sure there's no YouTube comments sitting over there that I am missing. Cool. Nope, because that's where DV watched. Okay, yeah, so I think we're good. Okay, I just don't like when there's glitches that got me second guessing myself. I did have one more question from this week that I almost forgot, that came from our Facebook group. And it is about being in a job where you travel out of state. All right, so I will read her the question exactly. It says, I am a massage therapist working on establishing a traveling practice. For instance, if I were to rent a place for a month in Denver, Colorado, coming from Austin, Texas, Would I need to pay state tax to Colorado for the income I made during that time? Also, will I be able to write off the expense for the month-long rental there? Great questions. All right. So if you are in business, you own your own business, right? That's our jam here is self-employed, being business owners, and you are doing business outside of your state physically. All right. If me, okay, I'm service-based. I never leave Colorado, but I have clients outside of Colorado. All right. That doesn't matter. I do not have to file state tax returns for every state that I have a client in that I work with. However, if you are traveling to other states, if you have employees in other states, if you have locations in other states, that does open up the doors to what we call nexus and requiring you to file non-resident state income tax returns for those other states. It's important to note every state has different thresholds. All right. There are some states that say if you did any activity in the state, got to file a non-resident tax return. There are other states that say you have to earn $3,600 to require filing a return in the state. So you have to know what states you're working in, how much you've earned in each of those states, okay? And then figure out which state you actually have to file for. Anytime you guys are dealing with multi-states, all right, in multiple states, I highly, highly recommend you work with a tax professional, okay, guys? And specifically when you are interviewing a tax professional, ask them if they work with multi-states, because not all tax professionals do. Not do you work with out-of-state, it's do you work with multi-state and non-resident state filings, right? That's the question you want to ask. And the other part of the question was, do you get to deduct those expenses? Absolutely. If it's business related, it's expensible to the business on both the federal and that state return. All right. Let's see more stuff in here. We have 8 minutes. We're good. He says, does the tax return from previous year get put on as income for current year? That's a great question. So federal tax returns, no. So what DV is saying is if I filed my 2020 tax return and I got a refund, does that count toward income? Federally, no. State depends, and it depends on whether you itemize or not. And what it comes down to is, did you get a benefit from deducting the tax you paid? Because if you got a benefit from deducting the tax you paid, meaning you got that state and local tax deduction if you itemized, then when you get a refund, it does get counted, a portion of it at least gets counted as income. All right. This is another thing that if you have a tax professional, they will handle for you. Tax software normally will too. It'll ask you, it should ask you qualifying questions. If you got a refund, it should then ask you, like, did you itemize? Or if you are using the same software year after year, it'll know if you got a benefit from it the year before. All right. Good questions. All right. Do you have to track mileage if your vehicle is fully for business? LLP, sole member. You should still track your mileage, because a lot of times that standard mileage deduction of, I don't even know what it is for 2021. That's embarrassing. I'm still doing 2020 returns, y'all. So let's see, 2021 standard. Oops. Why doesn't it just tell me? Why do I gotta click on things? There we go. Is 56 cents per mile. Okay. So in tracking your mileage, if it's 100% used for business, is as simple as writing your mileage down on January 1st of every year. Boom, 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 boom. Then you know how much you drove if that car is used fully for business. Because sometimes that standard mileage deduction is more than your actual expenses. When you're tracking actual expenses, guys, again, it can be depreciation if you own the vehicle, mortgage and loan interest if you have a loan on it, lease payments if you're leasing it, all of your maintenance, gas, all of that stuff, all of that goes into your actual. And then if it's 100% business, then you should be paying for everything with the business credit card anyway, and that's easy to track. If you're using a vehicle that's not 100% business, then you would take all of your actual expenses for the year and multiply it by how much you actually use the vehicle for business use. And then you absolutely have to track your mileage, because you have to know how much mileage you drove for the year. And then you need to also know how much was actually business mileage. There are a ton of tracking apps out there, mileage tracker apps, that's how I recommend you do it, just because everyone has their phone. Super easy. We have a mileage tracker PDF that you can print out. We have an Excel file if you like that. There's plenty of options out there. But DV is talking about a full business use vehicle. Do you have to track mileage? You don't have to. You can just take your actual expenses every year. But most of our clients are in the practice of also giving us their mileage, so we can make sure we optimize their auto expense for their business for the year. All right, one more, y'all. Okay, SEP IRA. Does the company set it up with individual accounts? So another great question. So your SEP IRA is actually a business. It's a business expense. So what I mean by that is your SEP contribution, when you make it, you can record up to. I'm positive you guys hear that, and I think they're fixing the elevators, and it's terrible. So that means, yeah, let's get this done fast, because that's not going to stop. Okay. SEP IRAs are a business expense. They're the one type of IRA that actually goes through the business versus your individual. So my business, I'm a sole prop, right? Or a single member LLC, your choice. At the end of the year, I have my income. I have all my expenses, my net income. I can contribute up to 25% of that to a SEP IRA and to reduce my business income by that amount. So let's say my net income, business income minus expenses, let's say my net income is $10,000. I can make a $2,500 SEP contribution and reduce my taxable business income down to $7,500. Okay, so it is a company account. Do talk to your brokerage, because not every brokerage, but I have found that different brokerages set this up a little differently. One thing to keep in mind is that those SEP IRA contributions, as well as any other IRA contributions, you guys, your Roths, your traditionals, and I have a really good mic, so I know you guys hear all that. You can make those contributions up until you file your tax return, which means up until April 15th, or if you file an extension, you actually have until October 15th to make those SEP contributions and take that deduction on your Schedule C. All right, one more. Hi, Joyce. Should I be using personal or business account to pay for gas maintenance when my car is used for both work and personal? Great question. All right, so the first thing I'm going to tell you is, if you have a tax professional, then ask them what they prefer. If you have a bookkeeper, ask them what they prefer, because every tax preparer is different. I've seen this done both ways. For us, how we like to do it, if you use your business, if you use your vehicle for business, we tell you to run everything through the business, and then at the end of the year, so that you don't miss expenses. All right. DV says, sounds like there's a rock band next door. They're not even next door. The elevators are like down the hall, but they do sound like they're right on the other side of this dang wall. It's really hard to focus, y'all. Okay. So we tell our clients, if you're concerned about missing expenses, then run it all through the business. And at the end of the year, we will adjust out your personal use portion. That's really easy for a Schedule C. For S Corps, you have to run it through your W-2s. Easy, just make sure you're talking to your bookkeeper and your accountant when you do that. And just remember that if you're doing this, so if you're running all of your business or all of your auto expenses through the business, and you end up only using your car like for 10% of the time, then your P&L is going to be skewed throughout the year if you don't have that adjustment being made more often than year end. So this really, how you opt to do it kind of depends on how much you use your car for business versus personal. If you have a team doing, working on your financials for you, because if you have a bookkeeper, you can just tell it. Like that can be something you do every month or quarter, is you turn in your log and they make that adjustment from your P&L to your equity or your balance sheet. All right. But definitely talk to your bookkeeper or tax professional, because I know there are clients I know I work with, or I have friends who are tax preparers that are like, no, don't run any of that through the books unless it's 100% business vehicle, because it screws things up and I don't like it. So definitely a dealer's choice there. Yeah, sounds like there's Rock Band. Yeah. Okay. So with that, it is 10:01. I do got a jet. I will see you guys again. Reminder, I will not see you next week. I will be on an airplane. So I will not see you next week, but I will see you in 2 weeks on the 16th. And that will be our last live of 2021. So definitely make sure you join us on that day. All right, guys. Bye.